Hello, my friend. Yes, it's me again, Nick Cranky, licensed loan officer with Washington State Department of Financial Institutions, and putting in my time at TriStar Finance in Bellevue. And right now, you probably know me as the ugly yellow sign guy who you called. So on this video, just like on the others, I'm helping you learn more about this program, and we are going to talk about credit and what is acceptable, what is not, what they're looking for. So you have to have a credit history that indicates a reasonable ability and willingness to meet obligations as they come due. Meaning you got to have some kind of proof, for the bank to lend you some money. And that's typically, at least three items that are at least 2 years old, with at least one with a 2,500 credit high. That's typically what they're looking for. Um, and then there's some stuff that they're not looking for. The most recent 2 years is going to be the most important things as far as any bad credit or good credit. Um, Bad stuff that's considered unacceptable is if you have more than one 30-day late within the past 12 months. Like even on a credit card, that could kill your deal. Something minor like that. A bankruptcy or foreclosure discharged less than 36 months ago. Outstanding judgments within the last 12 months, meaning a new judgment of some sort. Two or more rent payments of 30 days late within the past 3 years. But a lot of times we get rental verification waivers. Uh, Also, outstanding collection accounts with no repayments arrangement. Outstanding tax lien or delinquent federal debt with no payment arrangement. So you have, because this is a government loan, so any kind of other government loan, like a Sallie Mae student loan, if you're in default on that, that could just instantly kill the deal. And also accounts converted to collections in the last 12 months. Again, this stuff here and here and here is telling you, you can't have new bad stuff in the last 2 years. Um, some of the things, you had mitigating factors to unacceptable credit. You know, Circumstances that were temporary in nature beyond your control, like increased expenses due to illness, medical expense, injury, death of an income producing spouse, things like that. Um, but some of these things they're tough to get around. It just depends on what it is. And each individual situation is different. Now, one thing here is a lot of the banks and credit unions will have additional credit overlays on things. So this streamlined underwriting criteria for credit score of 620 or higher does not always apply. It just depends. Like lenders shall not be required to document adverse credit history except for those involving a delinquent federal debt or previous agency loan. That's not really the case anymore. Like if you have a bankruptcy, if you have a recent collection, the lenders, because USDA doesn't lend money, they just guarantee it against default or a portion of it. So a lot of the banks and stuff will have some things that overlay on top of it. Lenders shall not be required to obtain a rental history rating. This is something that's still very relevant and prevalent now, depending on when we run our electronic underwriting system, which is called GUS. It's called Guaranteed Underwriting System, called GUS. No explanation will be necessary for any derogatory items. No letter of explanations on unpaid collection accounts not required to be paid off, etc., etc. Generally speaking, this number will be 660 or higher for some of this stuff. The rental history, not always, but in general, just so that you know. Um, and then when because we have our own bank lines and we have a very large wholesale broker network of wholesale banks and credit unions, we can go below what a lot of the banks need for a credit score. Like 619 to 580, we can do it, but the lower your credit score is, the more kind of things you can't have on your credit. Um, you know, like here, for example, ratio waiver should be avoided unless strong compensating factors are present. Well, if you have the lower your credit score, the less compensating factors you're going to have. I mean, that's just how it is. Um, like credit score of 580 or less. Like they say, lender, you should not approve the loan with score of 580 or less if you exhibit any of the following things, and then it goes into those things again. So that's the whole thing. Is they tighten the loop as far as what you can do. Now, say if you don't have a credit score, you're young, or not young, but say you just don't have that much credit. So we pull up your credit and say there's no credit score, or only one with one bureau and none with the others. There's non-traditional credit lines that don't normally appear on your credit report that we can use possibly to help you qualify, like rental payment or rental or payment history, utility payments, like gas, water, power, insurance payments on like your car, or installment payments to a retail store. Let me kind of go into non-traditional credit lines. So we have to have at least a 3 to 4 trade lines with at least a 12-month payment history of in good standing. So I will show you. See, like utility bills, gas, electric, water, landline service, cable TV, insurance payments, excluding those through payroll deductions, including medical, automobile, life, household, renter's insurance, school tuition, payment to retail stores, stuff on, layaway. And that's how we can help you qualify with that. Now let's talk about debt ratio waivers. Let's just say that maybe your debt's a little high in comparison to your income. Now, when a debt ratio of 20, they have a front end and a back end ratio. 29%, that means whatever your proposed housing expense is going to be, it can't be more than 29% of your gross income. And 41 means all of your debt, including the household and proposed mortgage stuff, can't be more than 41%. It can be exceeded if you have a 660 or higher credit score and does not require additional compensating factors to be identified for the ratio request. If you're under 660, there's other things, like if you have a fair amount of cash reserves after closing, potential for increased earnings and career advancement if you just got out of school and you're in the entry-level position in your, chosen field. There's other things here too, like say you have a part-time job that might not have as stable as a job history. Just things like that, and then we submit the debt ratio waiver. So that 660 though is going to really going to help out in regards to all kinds of credit stuff. Let me also talk about a few other things in relationship to your credit. One of them would be what they consider, well, I think I'm on the wrong section. Anyhow, I guess that's it for credit. I'll 425-202-5655 for more details about the credit and your individual situation, like how a short sale might affect it, things like that. 425-202-5655. Give me a call. I'm here to help. Thanks.